Statements. What are the types of financial statements? There are 4 types of financial statements. Each has a different level of complexity, validity and cost. 1. Internally prepared. Internally prepared statements are prepared by a company without involvement of an external accounting professional. Interim financial statements are often internally prepared. 2. Notice to reader. Notice to reader, NTR, is the most basic type of financial statement prepared by an accountant. NTR usually relies entirely on the information provided by the company, with little or no validation or auditing of figures by the accountant. However, depending on the accountant, they may perform some limited tasks, such as some vetting of figures, breaking down expenses, ensuring that the capital cost allowance is calculated correctly, making sure the correct amount of income tax is paid, preparing rudimentary notes to the financial statements. It's important to check what services are included. NTR may be suitable for smaller or less complex companies preparing year-end financial statements. The validity of notice to reader can vary a lot depending on the accounting firm, Godfrey says. Some just regurgitate the client-prepared information. Others have the same reliability and depth as review engagement. 3. Review engagement. Review engagement is the next step up in sophistication. This type of statement usually involves some validation by the accountant. This could include reviewing the company's accounting practices, procedures for recording financial information, management controls, fraud management. A review engagement may be suitable for mid-sized and more complex businesses. This type of statement may also be required by lenders, investors, other partners, or someone interested in buying the company. 4. Audited statements. Audited financial statements provide the highest level of assurance of the validity of the information. The accountant may request supporting documents, review internal controls, verify accuracy of numbers, conduct on-site spot checks, perform an audit, count of inventory, evaluate accounts receivable. Audited statements provide validity and involve a deep dive into a company, Godfrey says. The accountant makes sure the financials are accurate and correct. Audited statements may be suitable for larger businesses and those contemplating a substantial loan or investment. How are the different financial statements connected? All 4 financial statements are linked. For example, net income is recorded at the bottom of the income statement, see below. It is also found on the cash flow statement and statement of retained earnings. After dividends are subtracted, we get retained earnings, which are stated on the balance sheet.